Valentijn van Nieuwenhuijzen, you're head of strategy at ING Investment Management. We are approaching the end of a fantastic year, at least for those who were invested in equities. What about next year?
Well, next year still looks like a good year for equities as well. It is, I think, a year where you see that the global recovery will be broadening further, especially in the developed world. It seems like the US, Europe, Japan are all moving in the right direction. They all have their specific issues, but I think the most important for the market is they are moving in the right direction. And at the same time, the challenges are somewhat higher in emerging markets. I think they're the area with the biggest risks. But for the time being, it seems that the most important emerging market of them all, China, is bottoming out. So I think the underlying momentum in the global economy is supportive of, let's say, risky assets. So we're more constructive on equities, also a little bit in spread product, real estate, and we're cautious with government bonds.
Investors suffered very big losses in the emerging markets. Are there opportunities next year?
Well, obviously there are opportunities. I think if you look at emerging markets, the differences are very big. There are some areas which really need a lot of structural reform, which have a bit of an overheated economy, excessive credit growth and a sharp loss of competitiveness. But countries like Mexico, Korea, Taiwan clearly offer opportunities. Some of the Poland, for example, in the European region. So there are clearly big differences, and I think that's the message for emerging markets. Be cautious with overall exposure and be really picky in the regions and countries that you prefer.
Looking at the balanced portfolio, what would you reallocate for next year?
Well, I think in general with your allocation stand or balanced portfolios, it is important to remember that it's quite a dynamic and uncertain world that we live in. For now, it seems to be quite a constructive outlook. So I would really look to hold on to your equity exposures. But I think you have to realize you need to be more willing to change and adapt to changing circumstances. That is just something that in the aftermath of the financial crisis we need to learn to live with. So be cautious with really sticky and static approaches to asset allocation.
Coming back to equities, is there a market where you see special opportunities?
Well, I think for now it still seems like the recovery story in peripheral Europe is really interesting. So we like Europe as a region the best in global equity markets. Risk premia are the highest there, but specifically within Europe, peripheral markets seem attractive. Obviously, they have big problems. And this will not be easily overcome, but given the size of the risk premia there and the current direction of the cycle, I think this is really the biggest opportunity in equity space.